Okay, so today's video I'm really excited about. I've got Tyler, who works at the Service Center of John L. Scott, and he's here to speak with us today about the Market Ready Plus program. I've seen this program be, pretty powerful for people when they're getting ready to sell their home. So I wanted to take a few minutes and have Tyler walk through the program so that he can explain how it works from A to Z. And he's got a slideshow here that he's going to work through and explain the program to us. So, Tyler, I'm going to ask you to take it away and tell us about this program and how it works.
Yeah, great. Thanks, George. I appreciate the opportunity to join you on your channel and speak a little bit about this program. Like you said, it is really exciting and it is powerful. It's also something that's kind of new and a lot of people haven't heard of it. So this is a great opportunity to kind of run through it and give an overview. And you'll see, everyone will see at the end of the slideshow, there is a slide that talks about the importance of reaching out to the broker to get started. So I just want to say, if some question you have through this is not answered here, just reach out and George and his team will either answer your question or direct you to someone who can get you answers. We'll try to get through it all, but as you'll see, there's quite a lot, but it's all good stuff. So with that, I'll go ahead and share my screen. And then I'm just going to run through some slides. We'll talk about kind of what this program is, who it's kind of intended for, some real life use cases. We'll go over a bit about the costs and try to be transparent on that. And then we'll wrap it up. So Market Ready Plus is, this is kind of the definition. So Market Ready Plus, it allows a homeowner or seller to access funds to invest in their property and not have to pay until closing, with the goal of preparing the property to be in its best shape when it goes to market. So what that means is this is a program that provides an opportunity to basically do work on a house or to get a house sold. And I'll give some examples of what that means. But it's pretty advantageous to the person who wants to sell their home in the sense that they can delay the payment of those funds until they go to closing, which is pretty unique and pretty novel. And it's what makes this program a great fit for so many people. Right. So let me run through why people find value, and I do have some before and after pictures that will kind of a picture's worth 1,000 words. But here are some reasons that people that have used this program really value it. It's really fast, and I want to just underline that a lot of times when you're talking about a program or a loan product that can give funds to work on a home, it can be a long, drawn-out process with paperwork and mailing things. Market Ready Plus is all digital. It's online. It uses bank-level security. And it's really fast. So that's a really big benefit. You can get a decision very quickly. In some cases, it can take up to a business day, depending on the specifics. But in many cases, it's like a 90-second turnaround for an approval.
Wow. Okay.
Yeah, super fast. The funds are available based on the equity in the home. So again, this is a little bit different than some other programs. The amount available for the homeowner to borrow to put into their home to get it ready for sale is based on the equity in the home, which is different, right? It's a little bit a novel way to look at it. And in some markets, there are folks who either maybe they do have available liquid funds, or maybe they don't. But in any case, they do have significant equity in the house, and that could be used to get these funds to put money into the home to get it ready for sale. The borrowed funds and any fees are repaid at closing. So that's something else people have found really useful about this program. I'll kind of go over a couple examples of what that means. But it is again just advantageous to the borrower and different than some other programs. For instance, if you were to use a credit card to put to do some work on the house, now you've got to pay a credit card bill. It can get messy, and this program is designed to be what it's designed to work really well for what it does, which is provide funds to put into a house to get it ready for sale. And then last but not least, flexibility with the project types. I'm going to go into examples of that because it will help make the point, but it's a very flexible program. There are not a lot of rules or people looking over shoulders and dictating the different ways it can be used, which is great. People have found a lot of value in that.
Yeah.
So let me just show a couple of pictures before and after. Again, they kind of make the point. These are some real life examples of different things that have been used through the program. So in this case, obviously the painting was done. It's hard to see, but the little capper on the chimney was replaced. Driveway was cleaned. Landscaping was done. So that's just one example. Again, homeowner used their funds and equity in the home to extract a loan and then put money into getting it ready for sale. This one's a little bit more dramatic. So this is the same kitchen and dining space. but obviously a little bit more dramatic remodel level work that happened here. So new
Yeah.
cabinets, so you can see the wall came out and a new hood and a new range and appliances, all done to make the home more marketable.
Right.
Just another example.
Yeah.
Yep, good stuff here. So how are people using it? So when I talked about flexibility, this is really what I meant. It's really when you eventually get into the platform, if you decide to go this route, you'll see it is very straightforward in how you use the tool in the system. But people have used this for things like repairs and remodels, like you just saw. Can go from landscaping or painting to bigger jobs like that kitchen and dining area. For staging, it can be used for storage, for decluttering. So again, it's anything needed in this third bullet point there, anything needed to help get the property ready for sale.
Mm.
So for instance, it can be used to, for a pod to move things out of the house. It can be used if there's an occupant of a home who is being, who's in a life transition to senior care facility. It can be used for that purpose because getting the house ready for sale might mean helping that person transition into their new situation. So it's very flexible. There are some that are not used that often. That last one is just an example, but it is really flexible, and it's anything that can help get the home ready for sale. So very
Okay.
flexible, very open-ended. Yep.
Excellent.
So Cod, yeah, sorry, do you have a question, George?
No, I just said that's great. I mean, the that flexibility is key, right? I mean, I've seen other programs, similar, but they've had restrictions. You can't use it for this or you can't use it for that. And just my experience is that people have a wide range of needs when they're moving. So sometimes it's storage, sometimes it's remodeling. It can be all kinds of different things to help. Yeah.
Absolutely. Yeah. I
Yeah.
mean, that's the nature of real estate is every sale is unique, and
Right.
every point, everyone has individual needs. And then this program was built to be very flexible. So
Yeah. Yeah.
on the cost side, again, this will, the small print, we try to put in large print at the bottom of the screen. Things can change because it's a financial product. So as with any financial product, fees and terms can change over time. So I just want to put that out there. Having
Hmm.
said that, these are generally the costs that are involved. So this is it's a loan on, based on the equity in the home.
Right.
But so there will be an origination fee on the funds that are advanced through, for the loan. That is charged on the amount that's borrowed. So to give a quick example, and we have another example, but this is a question that comes up often. If a homeowner, decides this is right for them, they go through, they do an application. There's a hard credit pull. But the amount available is based on the equity in the home. They might be approved for a very significant amount, but if
Hmm.
they only use a small amount of that because maybe they just need to do some painting and staging and landscaping, the
Right.
origination fee is charged on the amount that's actually borrowed. So when they go to request a specific amount of funds to borrow, it's not just charged on the whole amount that they may be or maybe approved for.
Right.
It's based on the amount they request to borrow, and that's a big differentiator. I just want to point that out, and that's a
Yeah.
way that frankly, a John L. Scott broker can be a great partner in that process because the broker can help the homeowner determine which items would be best suited for getting the home ready for sale so that no more is borrowed than needs to be, and that'll
Right.
minimize that origination fee. So
Right.
just the
Right.
top 10 there. Then if there are multiple options, presented not to every borrower, but it's some borrowers, maybe most borrowers could have the option of a secured loan or an unsecured loan. If it's a secured loan, meaning there's a deed of trust filed, there is a paperwork fee for that. It can vary by where the home is located, but that is something else you may encounter. And this is important. And again, we'll go into an example that explains this. But if there is an interest-free period on the loan, and again, I have an example on that. If there is interest that kicks in after that interest-free period, if the home has not sold, then there would be interest on the loan. And again, with an asterisk that fees can change, it's right now, as with today's rates, it's about 1% per month that accrues on the amount borrowed. So it's not a significant amount, I don't think, but it is an interest rate, and we wanted to put it out there.
Yeah.
Again, you will, if you are interested in this program and you go through, you can learn all of this, ask all these questions, speak with a lender before ever actually taking out a loan, and you can get some good information that applies to you specifically because it
Yeah.
wouldn't be the same for everyone. And then
Okay.
last on the screen, again, we just like to point this out. There is a small fee charged to the service provider. So think of your contractors, painters. If you work with a GC, the general contractor that manages the work. If any work that's done that is paid through the platform, because all of the funds that are advanced through a Market Ready Plus loan are paid through the platform to the service pro, we call them, the contractor or the vendor. There
Mhm.
is what amounts to a credit card processing fee that's charged to the vendor. So when they go to accept payment through the platform, there is a small fee that's charged on the payment of them to them from the platform. So that's just something doesn't directly impact the homeowner the way the other 3 bullet points do. But again, in the interest of transparency, we wanted to just point that out.
Sure, sure.
So my best advice, though, if this sounds interesting, if it sounds like a solution, go through the process and speak with the people who can give you the best answers for your situation.
Right, right. Okay.
Yep. Okay. So let's go on that note. Let's look at 3 quick examples, kind of from the most common outcome to the least common. And you'll see what that means in a second. But these are just, scenarios. Obviously, like we said, every situation is unique, but this is just kind of to give some real life examples of how this could work. So in this example, a homeowner, decides home market ready is a good option. They go through the process of applying, again, hard credit pull. They find out how much they're approved for, and they determine that they need to spend, in this example, $40,000 on projects to get their house ready for sale. Okay, so that's the amount they borrow. So again, the most common outcome based on today's situation, today's rates, if the home is listed and sells within 90 days. I think in most of the area where John L. Scott operates, that's a pretty reasonable thing. If the home is priced right, there's not a lot of inventory and homes are selling pretty quickly. So if this is the case, the total amount for the Market Ready program that would be repaid at closing, so no cash out of pocket to do the work, but at closing would be the amount that was spent on the projects from the loan, so the 40,000. Any reconveyance and doc fees that are related to the loan, so that would be the deed of trust paperwork, because this was a secured loan. And then the origination fee, which again, as of today's rates, is 1.99% on that amount that was borrowed, which is 40,000. So like we talked about, this homeowner may have been approved for $200,000 based on the equity in their home, but they determined they only needed to spend 40,000, and so that's what they borrowed, and that's what the origination fee was charged on.
Okay,
that's the most common example as far as the timing. Outcome B is less common, but worth going over. The home might linger if it was priced too high, or if it's in a market that isn't turning over as quickly. Let's just say in this example, it's on the market for more, for 6 months, right? So the homeowner in this case, their loan had an interest-free period of 90 days. So in this example, because it went another 90 days after that, the interest would accrue for months 4 to 6, right? So still no cash out of pocket. It's just that interest is now accruing for those months 4, 5, and 6. So at closing, they would repay the 40,000 that was spent on the projects, the doc fees, the deed of trust paperwork fees, the loan origination fee. So same as outcome A so far. And then the only difference would be that accrued interest on the amount that was utilized for months 4 to 6. So again, that's right now about 1% a month, but it can vary by situation.
Sure. Okay.
So that's less common, but again, not totally uncommon. Outcome C is possible. Again, in this market with the inventory levels that we see, this is not common, but again, it is possible. So I want to just go over it in the spirit of transparency. If the home does not sell within 2 years, right? So 24 months, the work is done, the home is listed, but it doesn't sell after 2 years, that is when the loan is due. And so what this means is that if the homeowner is not able to sell the home by that 24th month, they can work with, their real estate broker, but more likely their lender that they obtain the funds through the Market Ready program, and they can just work on repayment options. Again, this is not common based on our market, but this is how it would work. It's a question we get. What happens if the home doesn't sell, or if I take it off the market? The loan does need to be repaid, but it's just worked out with the lender as you would work out, other common loan types, personal loans, et cetera. Yeah. You would just work with the lender and kind of go from there. Yeah. But again, I just want to stress in our market, outcome A here is more common. And George, I'm sure you saw, you've mentioned you've had sellers you've worked with who have used Market Ready. I think outcome A probably is pretty much where everyone landed.
Yeah, absolutely.
Yeah. So, okay. So those are the 3 common outcomes. Again, it's going to depend on your situation. So my best advice is to reach out to your broker. So I have a couple examples here. I thought, George, since you have had sellers that have worked through the program, I think you have an interesting one you might want to just tee us up with, and then I'll go through some of the others that just to kind of draw the picture of how this can apply to people's real lives.
Yeah. I mean, just in my practice, I meet with a lot of people that are, preparing their homes for the market, preparing their homes for sale. And, having some additional money to be able to work with, to be able to prepare their home can be a big deal for people, not only to just enhance the sale, but also, to really be able to capture fair market value even. I've got one group that I'm working with right now, and they've got a staircase and a deck that really needs some work. And the discussion has been, hey, listen, we really need to get the stairwell and deck repaired, because any appraiser that walks through here is most likely going to take issue with it, and it'll become a financing issue, and it'll be very difficult for us to close any kind of a loan with the state of the stairs currently. So that's one example. I had another example about 6 months ago. I had a single lady who was moving out of a home and downsizing, and just really was pretty overwhelmed with the process. There's a lot for her to do, and so we used it for storage. We also used it so that she could hire some people to help her with her move. And I just know, like, in talking to her through the process, it was a real game changer for her. I mean, she really, having that influx of cash, she had equity in her place, so it wasn't an issue for her to qualify for the loan. And I just kind of look back on that and say, what would we have done without it? She would have been in a real difficult situation trying to get her home ready for the market, and then once she got a sale, being able to move within a 35-day period, a typical escrow period. So I just see a lot of people have needs like this, and being able to tap into their equity. A lot of people have a lot of equity in their home, so it's really just a great tool for people to be able to use to to get them through that pinch point, whatever it may be, to help them either move or help them prepare so that their home is financeable and it's going to pass an inspection or appraisal process.
Absolutely.
Yeah.
So the other examples I have here, I kind of touched on the one, but we had, the example of the family who is helping an elderly parent move into a senior living, and the process of getting the actual person into the care they need, and then out of the house to get the house ready for sale. That was kind of an outside the box way to use the funds from this program, but it's built to be flexible. It's built to just allow for anything that would help get the property ready for sale. So that's one example. Another one was we had a broker who I spoke with, and had a couple who approached him because they had some medical issues that resulted in debt, and they were really afraid that they would actually their only option was bankruptcy. That's actually what they approached the broker about. They'd known each other for a long time. Anyway, long story short, they were made aware of this program, and they found they had a path to actually get the work done in the house that they lived in for a long time, using the equity. To George's point, a lot of people in our footprint, our market, do have that, are in that situation where they do have equity in the home. They just don't have liquid cash. So they were able to get a much better outcome because of accessing this program and selling the home for a price they didn't think they would be able to. Like we always say, everyone's mileage will vary, but in this case, they had a much better outcome.
Yeah.
And then the siblings who inherited a grandparent's house. This actually took place in North Seattle. There were some younger siblings, and they inherited this house from this grandparent who had lived there for, I think, 70 years. And so there were just boxes and boxes of stuff everywhere. And everyone can kind of picture what that would be like. And they used it for the pod and the cleaning service, and then the painter. And it again took a large old house that was in need of a lot of cleanup and decluttering, and frankly staging and painting and everything, and made it sellable, where it would have probably been, months and months and months of the siblings doing the work themselves. Again, this was just a unique kind of in a little bit more outside the box way to use the program, but it worked really well for them.
Yeah, absolutely.
Yeah. So here's the last thing I have. It's just how to get started. If this sounds like a program that could apply for you, or that you could find value in, or fits your situation, the best first step is to reach out to George and his team, or John L. Scott Broker. They can send an invitation to create a homeowner account and begin the process. And all that account does is just give you access to the application to start the process of finding out, how much equity or how much of a loan would you potentially be able to be approved for, and then going through the process of actually doing the application with the lender. There's a fantastic customer service team that's available from within the account. They can answer any question up front. They can, respond through chat or through email or on the phone. But everybody's really here to help and explain how this works, and try to get it to a place where, if it's something that a homeowner is interested in, they feel at least comfortable that they understand it well enough to go forward, or
yeah.
not.
Yeah. Perfect.
So
So,
that's
so one
yeah,
last
that's how it
question.
works.
So a person
Yeah.
wants to take advantage of the program or at least apply. So they get a link that they can click on, and then they it takes them to the site, and then they fill in their information. And then how does it go from there? Are they contacted from the lender at that point, or?
So the first, like I said, the first step would be yep to reach out to George and his team, the real estate brokers. They invite the accounts are invite only. So the consumer, the homeowner would need to reach out to a broker to get the invite sent to them. But
Right.
then to your point, they just click the link, fill out the account. It's much like other online accounts. You just enter some information, and then there is a self-service kind of a calculator. It's an equity estimator that lets you see the amount that just based on the estimated value of the property and the mortgage information that's publicly available. It will kind of give a picture of how much could be available, and
Mm-hmm.
from there, it is a very self-service platform. So there is no direct outreach at that point from the lender. The homeowner would actually need to take the steps of going through the portal and submitting an application, filling it out, sending it in, and then at that point there would be some interaction with the lender
I
through the
see.
approval process. But
Yeah,
again, the actual initial approval can be very quick and it's digital.
I
But
see.
just having said that, there are humans that are there to assist if needed. But
Yeah,
it was built to be very fast and very responsive. So,
yeah, yeah.
yeah.
Perfect, perfect.
And
Well,
from
hey,
there,
thanks.
last thing, and this is good to know, throughout the rest of the process, it is very homeowner and broker centric. So when there's a new project to be created that happens within the platform, you can search for vendors within the platform. You can add your own vendors or contractors. Again, all the payments to those people go through the platform. That's an important thing to know. The loan funds are paid from the platform through the platform to the vendor and contractor. But with that said, it's very flexible on who can be who the homeowner can work with as far as getting the work done. It's very flexible, but it's all driven by the consumer, by the broker. There's no one kind of behind the scenes making sure everything is coordinated. But again, that's built to be very flexible and based on how the homeowner wants to approach it.
Right, right. Very good.
Yep.
Okay, well, thanks again, Tyler. I really appreciate this. That's just a great summary of how how the program works. And for those of you that are listening, if you're interested in the program, feel free to reach out to me. We're more than happy to walk you through the process, and get that initiation link sent to you so that you can explore, what options would be available to you. And we're here to assist and walk alongside you every step of the way. So thanks again, Tyler. Appreciate you. And yeah, just great information today.
Great. Thank you, George. Good luck,
Thank you.
everybody. All
Thanks.
right.